Welcome to Trading Lounge and the gold and silver report for the 5th of March. So I thought I'd better start with the dollar index here because it's pushing higher. So we need to look at it like this with wave 3 low here. We've got an A and a B and a C for wave A here, an A and a B and a C for wave B here, and then moving up for wave C. So in a nutshell, wave A, wave B, and wave C up here. Wave C will have 5 waves, so we're looking for 1 and 2, and we can just see that this is just starting here with 1 and 2, and 1, 2, 3, 4, 5. So we've still got further to go for the C wave, third wave, fourth wave, and fifth wave. So we're going to be up between 92.50 and 93.50, somewhere up into that space there, and obviously that's going to push the gold down further for that. But the main takeaway here is that this first leg here is corrective. It's an A and a B and a C wave to make the A wave. So that makes the whole thing corrective. Okay, that's the takeaway. That's the important point here. So even though that's pushing up, that will eventually come down. I mean, we're expecting a low. Well, I'm expecting a low in place here for the dollar. So from wave 4 down to wave 5 of C here to finish, and once that's finished, then a push to the upside there for that. Now we also should look at the 10-year bonds as well. We haven't looked at them for a little while. So last time we spoke with these, we were down here somewhere, I think, and we're looking at this to play out here. So we've got wave B or 2 here, then 1 and 2 and 3 and 4, and going up for wave 5 here. So this is just not finished to the upside yet either. So I'm from Australia. In Australia, the government have started buying out starting to buy bonds off the government to keep our yield down as well. So I suppose this is going to be a concern for the Feds at some point. So they will end up capping it probably into the top of this fifth wave area through here. But still new highs to go in all of this. The other thing that I wanted to have a look at too was Barrick Gold. I don't have it labelled, but I still just wanted to have a look at it. I'll come back to that, just squash it up here a little bit. So this is a daily chart. Might be good to put it on a weekly chart, I think. I just find it sort of interesting, really, that get some of this out of the way here. It's a bit hard. I have to make videos on a small screen so they present bigger when presented. So I can't use my full screen. Anyway, that's just a design thing. So it's interesting here from the 2016 low here for Barrick Gold. This is a weekly chart. So in this case, looking at Barrick Gold here, I can see that this move up here is the impulse wave, and then the corrective wave is wave B. And then we would need to look at this as the 5-wave structure up here as 1 and 2 and 3 and 4 and 5 for 1 and back for 2, up for 3, back for 4 and up for 5 here. So this can be laid out, well, it could be wave 1 and 2 here, then wave 1 and 2, that would pull back to the 50-60% retracement level. So there is a little bit of hope there for this. Let's just put that in there. That's the 61.8%. So it's really got to sort of stop around, that 1750 mark there and start to reverse there. But if this continues down, I mean, this can easily be viewed as an A and a B and a C wave here, and then make new lows below this one here. Now, I don't know if that's the case just yet, but it certainly looks like it, because when I look at this, if I take it from a weekly into a daily chart here, just to look at this move that's coming down from the top here, I was just looking at it the other day. And I can see that it's got 1 and 2 and 3 and 4 and 5 for wave 1, back for wave 2, down for wave 3, back for wave 4, and then coming down for wave 5. Now wave 5's not finished here, it's a little bit hard to follow, but a third wave in here, fourth wave and a fifth wave to move down here lower. So still got like 2 weeks or whatever to come down lower. The level here, the $20 is important, so it's going to stick to that. Then the $18 is important in that regard. Can we put that? Oh, I'll do that later. It doesn't really matter. But my takeaway here was that this move down through here is definitely impulsive, right? So that means that once this is finished here, we'll have an A and a B and a C wave, and then we'll have another 5 waves down after that. Now we could just be in a larger ABC pattern for this, so that means that it could get ugly here for a while. If I just go back to the weekly chart here, because we got 5 waves down here, and that's clear as a bell to me. So 5 waves down here, that's going to produce 3 waves and then another 5 waves. So it's very difficult for this to be wave 1 and 2 and 1 and 2 here. So this is definitely an A and a B and a C here. It may be just the A wave here, and then we come back for a bigger B wave, and then we go up again for a C wave. That's also possible as well. We'll have to check the speed of the following 5 wave structure here. But I can tell you that that's 5 waves. We're going to have 3 waves and 5 waves here. The other interesting thing that I wanted to point out too is that, this Barrick, I think it's the biggest gold producer, isn't it? Followed by NCM, Newcrest Mining from Australia. So this 5 waves coming down here, that started at the same time we've had the correction of gold coming down from the 2000 area, roughly. So we can count a clear 5 waves here. It's difficult to count that clear 5 waves in, this is gold weekly here. It's difficult to count this down as 5 waves here. Possible, maybe, but I was thinking if Barrick, the trouble with gold stocks is that they tend to they'll either follow the stock market kind of thing, or they'll follow the commodities, depending on other issues, I guess. But can we get this as 5 waves down? Probably not, but it's not out of reach. If that little spike was wiped out here, then it becomes possible at that point, that spike and that spike. But anyway, we'll see how we go. But I just wanted to point out that, there's the biggest gold stock with 5 waves pointing down here. So that's a problem, that means that it's got to go back up and go down again. So, do we see that here with this as well? Is this just sort of one leg here and then another leg here and then another leg here for this, the same as Barrick Gold? And will it come down further? Taking this wave 2 low here to the top of wave 3 here, 38.2% retracement is where we are right at the moment. Now, as you know, I'm tracking 2 counts here. One can sort of finish soonish, and the other one can take us even lower for this. Anyway, food for thought. Today we'll go and have a look at this, and and maybe I've got this count wrong here in that regard as well. Maybe this, maybe this is not 1 and 2 here. Maybe this is just wave 2 sitting that and sitting over here for that. So we just. So we're short 1 here. We'll still have 1. I have to recheck. Anyway, I'll recheck that. But anyway, we'll just continue to work with this. We understand that the banks are, also holding a lot of paper contracts on all of this, as most people that are tracking gold are aware of that. So all those banks that are that are tracking, that are, you know, you've got Morgans that are accumulating gold, and you've got the other 8 banks, 6 banks or whatever, you know, with all that paper contract in there, and you know, they're basically going into a situation of controlling the gold market. That's cornering the gold market. That's really what it comes down to at the end of the day, I'd imagine. So if they're cornering the gold market and they're talking about a currency reset, you know, are they cornering the gold market because they feel that, you know, gold's going to be the currency? I mean, they can try that, but that's not going to work for very long. I mean, Bitcoin's just going to come up and, you know, it's at 1 trillion now, and it'll take out, you know, it will just keep, you know, it will become international trade through all the big tech companies. That's what will happen, and it'll keep growing that way. So there'll be that divergence between the two of them. But anyway, this move down through here, let's just go in and check it out. So first of all, we don't need that much data in there. So there's a couple of ways to look at this. As you know, I've been looking at it in 2 ways. If it's been working in sets of 3s, waves, which I don't really think it is, you know. I mean, we've got a couple of spikes through this, which are a little bit sort of unnecessary, and then it puts it into a different picture, so to speak. But anyway, if we were counting an impulse from this last high here, this is how it would pan out. Wave 1 here, wave ABC for wave 2, then wave 1 and 2 here, and then 1, 2, 3 will come down for 4 and 5 here for just the 3rd wave. Then we've got to go back for the 4th wave and down for the 5th wave here for that one, then the 4th wave, and then the 5th wave here. So that's the way that it would count to the downside here. So the 3rd of the 3rd here in Elliott terms is doing all the right things as 1 and 2 and 3 and 4 and 5. We'll take a closer look at that on the hourly chart. But there is a you know, if we are working in groups of, you know, 3-wave structures for all of this, then it's possible that this last one could be an A wave, a B wave, and a C wave down here to finish this off as a WXY. So we've also been tracking that as well. I don't know if that's on the 4-hour chart or not. Yeah, it's good enough here. So this can finish down here with this, with the A wave here and A, B, C for the B wave, and 1 and 2 and 3 and 4 and 5 and finish here. So we'll be looking at that 1650 area for that. There's a bit of trend line support coming off those 2 trend lines for this current low here, plus the 1700. So, you know, there's a few good reasons to see it bounce around this little area here for a while, and also the 38.2% retracement levels in there. So there is this count to consider as well, but we're still going down further. Either way, you know, we're still going down further. So coming back to the count on the daily chart here for this, we'll just go back over this so your head can follow it through. So from the B wave up here, we've got 1 and 2, and then 1 and 2 here, 1, 2, 3, 4, 5 for the 3rd wave, the 4th wave, and the 5th wave for the 3rd, the 4th, and the 5th. So we'll have a look at this from the daily chart into the hourly chart and just peg that down a little bit further. Well, there's wave 2. So we've had orange wave 1 down, wave 2 here, and then blue wave 1 and 2 here, and then we've got, need to open this up a little bit further. So just from the blue wave 2 here, I don't know if you can see that there, that's it. From blue wave 2 to blue wave 3 here, we'll be looking at 5 waves down, so wave 1 here and 2 here. And I'm being a bit conservative with this wave 3 here. It could actually be down further, but that's what we've been counting down here with all of these little waves. So wave 3 and wave 4, I think last time we spoke we were looking for something in this wave 4 business here, and then looking down for wave 5 here, so somewhere in there for that. This wave 4 needs to come into play. This wave 5 needs to come into play. This wave 3 will need to come into play. This wave 4 needs to come into play. And then this 5th wave down here, closer to 16 there, needs to come into play. But that could be longer through here. But anyway, we'll see how it finishes off, because commodities can continue to extend in their 5th waves, but we are getting the extension in the 3rd wave. So the rest of this should tighten up quite tightly towards the end, but still taking us lower with all of this. So really that's what we're looking at here. So the market will grip to the 1700. We know that we're also around the 38.2% retracement level, so we're going to start seeing it all tighten up. We're starting to see it tighten up here now with these bounces, you know, so it's going to be there. Then we're going to see a drop further from that point. And the silver chart, it's silver. So we have to run with the bearish count now. We were hanging in there with the positive, both counts, but from this little top here, we counted down 1 and 2 and 3 and 4 and 5. We can look at that in a moment. So it couldn't go past that 5-wave structure there. And if it did that, then it was the bearish count. So the bullish count's out the window. And we need to look at this as the A wave here, the B wave up here, and then 5 waves for the C wave down here, which will be 1 and 2. And we'll look at this a bit closer here. That can come down further, 3, 4, and 5. Coming down, you know, past here. So the other interesting thing too is that, you know, with this news event with the Wall Street boys here, you know, if we sort of forgot about that a little bit, then we could just go 1 and 2 here and 3 to here, ABC for 4 and up for 5 here. So what I'm saying about that is it's just a long shot, but I just need to mention it because weird things happen, and I'm just going to dull this out here. But it's possible that the B wave is actually on this high here. So we've got an A wave, a B wave, and 1, 2, 3, 4, 5 here for the wave 2 here. Now it won't matter, it won't bother us at this point in time, but further down the food chain down here it will bother us, because the difference will be that then this would need to be, this is wave 1 as it stands at the moment. But this wave 1 might need to migrate over here somewhere on this low as 1 and 2 in here, and then 3, 4, 5. So it can make a difference a little bit later on. Look, it's just a bit of a long shot, and it's probably not the case. But when I see events that, you know, that things that pop out of the box that are not supposed to be there, so to speak, then I got to kind of think out the box as well. That's all I'm saying. So it's not a matter of being right or wrong. It's just a matter of covering the bases and understanding, getting a fuller, wider understanding of things. So with the bearish thing in mind, let's go to the 4-hour chart, then the 1-hour chart. So obviously we viewed this before, and we looked at going long here and short here. So maybe you're short. So anyway, from here, 1 here, an A, an ABC for wave B, and up for C for wave 2. And then we're counting 1 and 2 and 3 and 4 and 5 here. Now, if we're going to be bullish, then this low couldn't be taken out here as such. But it was taken out. So there we go. So we've got 5 waves down here, and then we need wave 2. It didn't really pull back to where it was supposed to pull back to, but anyway, it's sort of, it is what it is. And let's see how that plays out. Now, obviously, it's hit a brick wall here at $25, which is the medium level, halfway between 2 major levels here. So it's going to dance here on this floor for a while. So, you know, eventually it will become the resistance, the $25, but in the meantime, it's support. So we'll use this as our stop here, just in case folks are short. So, yeah, just pointing out, you know. So technically speaking, the market shouldn't go back above wave 2 high there, so that we can put our stop there. So that's quite nice and tight. That's a good risk reward and probability and all that sort of stuff. So I might just clean this up a little bit. I'll just leave that. I'll just check what I've done on the hourly chart here for a moment. I mean, this wave 3 should be longer than wave 1 here for that. Just check. Oh yeah, okay. I'm not as lazy as I thought I was. So B wave, wave 1, A, B, C for 2, wave 2 here, and then, yeah, we can see here how this is laid out here. So we can look at, this is, maybe that needs to be 1, and not to matter, wave 2, 3, 4, 5 here, and we've got wave 1 here and the wave 2 here. A little bit hard to trigger this, but I think it's 1, 2, 3, 4, and 5 here for wave 1. So I could just borrow this again here for a little wave 1 and 2 in here. Now it's going to get skewed when it's working with large numbers, but we should end up dropping lower. 1, 2, 3, 4, 5. That's okay. 2, 3. I'd like to see that come. I'd like to see wave 3 a little bit longer here than that. But this is where you need to be a bit philosophical about things. But we still need this wave 2 to wave 3 here. We need that longer than wave 1 here. If not, then wave 5's got to be shorter than wave 3. So it's something we also need to work through as well. We should get some sort of retest of the 25, which will... So we've looked at going, I think we've got a short position around here somewhere for that. And we've got our stop, copy, just roughly. And even though I put trades out, just remember that you have to take responsibility for your wins and your losses. I won't say disclaimer, but I'll just say it's all your fault. Yeah, so look, that's it. So apart from this little bump in the road at $25, we should eventually get through there. You know, it's a normal thing. We basically come down. There'll be a bounce here. Maybe there's a second bounce, which is normally a bit lower, like a ball bouncing on the ground, and then coming through, and then the retest. Then you can short again at that point if you wanted to short. And I think that we will actually. It's just the right thing to do. And what that also does too is it enables us to use the 25 here as the once that goes up there and breaks through that low, that tells us that you know, all the orders have come down and secured that as the place. So then we can put our stop there, but keep the stop up here somewhere, and we bring it down a little bit later, just in case we get a double check. But you can see the scope of the move to come down here at the moment. You know, when we're looking at a 5-wave structure as such, as 1 and 2 and 3 and 4 and 5 here, it is the third wave. And then in the third wave, we'll have 1 and 2 and 3 and 4 and 5 here. And that will be the third of the third. So really, we're just coming in, when you think about it, we've got the third wave coming down here, the third wave here. Then we've got wave 1 and 2 here. So we've got the third of the third, and then this is the third here, and that's why it's gone quite quickly here, but hit the brick wall here. So this is really through here, that's the middle of the whole trend here. So from the top here down to the bottom here, that's the center of it. So in a way, wave 2 here was really sideways and complicated, so wave 4 is going to be simple. But as I mentioned before, I'm not quite sure that that's going to be wave B there. I think we could even have it here as well, but we'll just keep that in mind for the time being, because that's a pretty big wave 2 here for that too, you know what I mean? So that doesn't add up either. So there's a couple of reasons there. So we just need to be a little bit cautious, but even so, wave B being here, we're still on this pathway here. We can still track 5 waves down here for this. Alrighty, that's enough waffling on. I better bugger off. So check you later.